Welcome back to Winning on Taxes. So we covered a lot of information in that last section. Just really talking about how to make sure you don't have problems with the IRS, and that's really what knowing your reporting requirements is about. So knowing what you have to file, what needs to be reported, and the rule of thumb is everything, any kind of income throughout the United States. And if you don't have the W-2s or 1099s or whatever that was reported, wait until after May in a given year. Then you can pull what's called your wage and income transcripts. If you have an IRS.gov account, you can go online. You can access through your account, you can pull up your wage and income transcripts, and that shows all the W-2s, 1099s, anything that was reported as income under your Social Security number. Also, frequently mortgage interest deductions, and you want to report all of that, because if what you file in your tax return doesn't match up with what the IRS has, that is very easy for them to audit. Their computers pick up on that automatically. So if you're not sure, wait till it's filed and go in, or wait till you can get those wage and income transcripts after May, and then you can always file on an extension. Make sure to file an extension, but again, there's nothing wrong with doing that. People do it all the time. That will make sure it's accurate. But if you make a mistake, go in and amend your return. If you do it before the IRS finds it, you're fine. It happens all the time. So what about foreign income? We touched on foreign income. Also needs to be reported. How is the IRS going to know? Well, it might be reported, it might not, it might show up in your bank statements, but you are required to report all incomes. If you have foreign stocks, if you have overseas ventures, if you have real estate overseas, all of that needs to be reported. Even interest gained, because that's income off of foreign assets, foreign accounts. So just want to kind of go over that. Any source of income, foreign or domestic, it most likely needs to be reported. Now, if you're paying taxes on foreign income, usually get a credit for that as long as there's a tax treaty in place between the United States and the other country. So you should get credit for taxes that you pay in most circumstances, but be aware that is an issue. And if you're working somewhere as a U.S. citizen or resident, you still need to pay on foreign taxes. Can really surprise people. Now we're going to shift gears a bit and talk about assets. What if you own a home? What if you have property, stocks, bonds, CDs, IRAs, 401ks? If you have assets, they don't need to be reported generally. So if you have a bunch of assets and you're not making income off of it, it's none of the United States government's business. People can have all kinds of assets, and if it's not used in the reporting of income, it's none of their business, unless you owe taxes, and that's a different ballgame altogether. But again, there's no need to report assets unless you sell them and then get income from them. So this is something where a big thing that people run afoul of, and I see this happen all the time, where they will move a 401k from one business to another. You need to make sure that's done correctly and within the correct time limits, because that is a taxable event. Anytime you sell anything or you move it from one asset to another, it needs to be reported as, hey, I'm just exchanging one asset for another, or the IRS will treat it as if you sold the whole thing and got profit from it, even if you didn't. So there are strict rules about that. Make sure you're working with your CPA or tax preparer to make sure that these are done right and to protect yourself. If you're moving a 401k or IRA, make sure you deal with it early. If you know it's coming up, address it and try to avoid those taxes. There are ways to do it, but if you don't follow the guidelines, kind of the safe harbor, it becomes a lot harder to fight those assessments. So do it right the first time. But typically, if there's no income, you don't need to report domestic assets, even bank accounts, even investment accounts, because a lot of that is already reported to the U.S. government. If you have, they don't report how much is in your account, but if you receive more than 10,000 or more, the IRS sees that. If you send out or receive any transaction over 10,000 is reported. What you have to be very wary of, we're going to talk about two last things in the rest of the show. First of all, foreign assets, and second of all, business reporting. So business assets, and that's been in the news a lot. So we're going to give a quick update on that and really dive into what you need to be concerned about. How do you protect yourself and your family from any tax issues? We're going to get to that right after this next break.